The Federal Reserve just held interest rates steady for the second straight month, keeping its benchmark rate at 4.25 to 4.5%. Despite fears of slowing growth, Chair Jerome Powell says the Fed remains cautious. Tariffs and Trump-era policies are fueling uncertainty. Inflation hit 2.8% this year, with Powell noting trade policies could keep prices elevated longer than expected. The Fed now predicts slower GDP growth, just 1.7% in 2025, while unemployment could rise to 4.4%, but officials still forecast 2 rate cuts this year. Markets reacted cautiously. The S&P 500 briefly rallied during Powell's speech, while Treasury yields dipped. Investors remain torn between growth risks and sticky inflation. The Fed is slowing its balance sheet reduction to $5 billion monthly, signaling it wants to avoid tightening financial conditions too aggressively during this shaky period. Long-term inflation expectations are rising, but Powell dismissed consumer sentiment surveys as outliers. The Fed insists it's data-driven, not reactionary. Key takeaway: the Fed's walking a tightrope, preparing to cut rates if growth stalls, but ready to pause if tariffs keep inflation above target. Stay tuned.